Now, what about co-mingling? This is the situation whereby the entrepreneur, the businessman, does not have a personal account for himself, or even if they do have personal accounts for themselves and business account, they do not respect that kind of separation. How is it at a risk to them as businesses if they are doing that?
Every SME entrepreneur sees cash or sees cash as his.
But is it not his?
It's not yours. The profits that will come out of the sale that you have done is what is yours. Instead of employing a full-time accountant to stay with them, making sure the books are always good, they will wait till the end of the year, go and give all the receipts to the auditor for the auditor to start the incomplete records for them. And by that time, GRA have also computed whatever they want to compute, and they will slash it on you. That time, your auditor cannot help you. Now, when GRA came to audit them, around that time, the man was owing up to the tune of about 350,000 Ghana cedis. That was penalties plus the tax itself. And the banked amount that he had in his bank account was somewhere around 150 or something thousand.
In fact, in case he had picked an accountant and paid him on monthly basis, he is so sure that the amount that they spent in penalties alone will not be spent in paying the salary of the accountant. Ken, welcome to today's episode.
Thank you very much.
Well, let's dive right into the conversation. So, with your 15 years working experience with small and medium businesses, right? We want to find out what is the most common misconception that entrepreneurs have about what accountants actually do for their businesses.
Okay, thank you very much. And thank you also to your listeners. I greet everyone. The most common thing that entrepreneurs have about accountants is that they see us as money spenders, or like people who come in the business to come and spend their money. Because every time you tell a small scale business person about accountants, what they see is money. Right then they see money written all over you. So they see you as somebody, like they see you much like a tax collector.
No, but that's interesting. So, what makes them feel that way? Is it because you will encourage them to pay taxes? Is it what's caused them to think that no, this guy is here to ensure that I spend more instead of helping me to manage or maximize my profits?
So that is one of the misconceptions right there, as you said it. So you see, instead of them seeing you as helping the business grow, they see you as the one spending most of the money. And basically, most at times when they start seeing the benefits or seeing the fruits of what you have brought into the business, then their mindsets start changing. That is when maybe they can introduce you to maybe a friend or another person to tell them that, Charlie, this man, when he came in, Charlie, this and this, right now, I'm stable. The GRA people don't come and worry me again. Right now, I'm stable. I'm this, I'm that. And there are others too who see their auditors as their accountants.
Oh, okay.
There are others who see their auditors as their accountant.
The entrepreneurs.
Yes, they see their auditors as their accountants. So instead of employing a full-time accountant to stay with them, making sure the books are always good, they will wait till the end of the year, go and give all the receipts to the auditor for the auditor to start the incomplete records for them. And by that time, GRA is also have also computed whatever they want to compute, and they will slash it on you. That time your auditor cannot help you,
Yeah.
because around that time you have already committed yourself, and you cannot go back and say that, oh, maybe this month I needed to file but I couldn't file. No, around that time you can't do that anymore.
So it's more of because the regulators will need their books. So the auditors will need what do we call it? GRA
GRA.
will need their books. So they are scared of GRA especially.
Yes.
And because of that, since they are requiring that their books must be audited, they will rather take their data to the audit firm and ask them to prepare their accounts. And also,
Okay.
that would be crazy.
That is basically it. It's crazy, but most SMEs, that is what they focus most of their money on, because he sees the auditor as a one-time payment person. You sitting there, he must pay you every single month.
No.
So he sees you more as a cost than as a benefit. Instead of seeing you as a benefit, he sees you more as a cost than a benefit. And that is basically what happens in the business field.
Okay, that's serious. Now, what about co-mingling? So this is the situation whereby the entrepreneur, the businessman, does not have a personal account for himself, or even if they do have personal accounts for themselves and business account, they do not respect that kind of separation. They are, whenever they need money, they want to pick money from where money is available, right? How is that the case? How is it at a risk to them as businesses if they are doing that?
Okay, so most of the times, every SME entrepreneur sees cash as his. They don't see
But
it.
is it not his?
Eh, it's not yours.
Okay.
You see, most of the times you invest in a business. Let's take it that maybe you have a cement business, you have gone to be a supplier of cement. So Gasem has supplied you cement for you to use, for you to sell. Now, in their supply, you have paid a certain amount for that supply to come in. Now, that money that you have paid is your capital, which you have invested in the business. The profit that will come out of the sale that you have done is what is yours. And even that one is not all that is yours, because there are regulators. So you need to pay all those people. There are people who we call they are employees, those who will pack. All those people are there for them to be paid. But the business owner, first and foremost, sees every cash as his.
Cash, whether it's
Sales, or even if it is for supplies, all the cash is his.
Okay.
At that point, that is how they see cash. But when you come in as an accountant and you are trying to decipher, trying to break it down, letting him know that, okay, let's pay you this amount so that you can use that one for maybe all your expenses that are personal to you. And then this one is what we will use for the business. Then they don't want to hear that, because around that time, it's like you locking a certain part of their money which they can't use. And you become an enemy to that person. It takes time, effort, and then so many convincing them to understand that, oh, so this money is not mine. This one is mine. This one is that. This one is for this. This one is for. It takes a lot of time. And in convincing them, it's not easy. Sometimes you have to work for free. If you want to work with an SME, you must be prepared to work for free.
And so working for free makes me a bit jittery because see, I am an accountant. That's my profession. I have bills to pay, and I am selling these skills in order to. So I am creating value for you. Now that I am working for free, it is not that free. It means that my work is going to be some form of investment, right? We are growing together. At what point, now that our accountant is working for free, at what point can he, the accountant, uh, be sure that he is going to reap the harvest?
Okay, so you see, the small scale business person
Yeah.
does not see you from the onset. You know, he has given you the mindset that you are already cost to him. He only sees the ones packing the goods out, those who bring them in. Those are the people he knows he is working with. You sitting in the office and in an air condition or a fan or something, he sees you as a cost because you come and sit there the whole day. They bring all the receipts to you, then you write something or you put something down, you tie something into Excel sheets, and then you tell them that, oh, okay, today we did this, we did that, we did. No, 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 no. He does not see you as working. So you working for free is to end the trust. So when you end the trust, that is when he will see you as somebody that he needs to pay. Now, around that time, that is when you also have value. That is when you can tell him that. Because when he sees at a time when GRA is on them, because they are the ones that they are. When regulatory authorities come, that is when they get afraid. Because that is when they see that, hey, my company can go down. So around that time, when you save him out of that rubbles, that is when he sees the value. That is when you can put your feet forward, saying that, okay, now pay me this. Let me work for you. So that, because I've been working for all this while, I've not received a dime. Right now, you see what I can do for you. So pay me this so that I will work for you. And you see that sometimes they become skeptical, but at the long run, they will give in.
Yeah, so because in one of our episode, I spoke with Dexter Hassan, and he spoke about the fact that there is this businessman who was not really filing their GRE returns on time, and therefore, when GRE audits came, when it was time for GRE audits, he had accrued interest and penalties are amounting to over 500,000, and that is just the interest and penalties. So taxes and by, and this is the case where he was suggesting that in fact, in case he had picked an accountant and paid him on monthly basis, he is so sure that the amount that they spent in penalties alone will not be spent in paying the salary of the accountant and reputation.
That is very, very true. And most businesses fall into this kind of category. Most businesses fall into this kind of. There are so many businesses. I've worked with people who they started with like them, like their family. So it was basically a family business. It was registered all right, but it was basically a family business. Now, when they started, everything was just between them. So the cash flow was not that much. Now, the business started growing. So more people got to know that business, and then people started coming in. Now, the business started growing and the cash flow became more. The man himself could not control how much cash that comes in at a point. He only banks them, and when the suppliers come, he pays. Now, when GRA came to audit them, around that time, the man was owing up to the tune of about 350,000 Ghana cedis. That was penalties plus the tax itself. And the banked amount that he had in his bank account was somewhere around 150 or something thousand. Now, so when that thing happened, I got involved with that company. So we went to CGRA and then we spoke. And then we told them that they should give us a payment schedule so that we will pay in installments. Now, upon doing that, the man was able to clear that debt that he accrued. Now, he did not understand why he has accrued that kind of debt. And I was telling him that, you see, since you started working, from your certificate, it shows that you started working somewhere in 2015. Now, we are in 20, was it 2021?
That's 6 years down the line.
6 years down the line. And you have been running this business like this. Anytime I come here and then we speak about you picking an accountant for you to, for the person to work for you, you don't see the value in it. Now, GRA, you know, in Ghana, GRA, sometimes they give you the leeway. They will allow you work for so long that at the point when they will come, you will not have any excuse about how much you owe.
And I believe it is not intentional that they know you exist. They may not know you exist.
Yes.
They may not have adequate staff to be doing enforcement. So when they catch you, they
catch you. So that is what really happened. When they catch you, they catch you.
Yeah.
So at that point when they got hold of him, he had nowhere to go. So around that time, I was working in an auditing firm. So that auditing firm, we went through with GRA on it. That was when he decided to pick an accountant. And since he picked an accountant for him to work, the man had not even a whole year. His total tax that he had paid was not even up to 5,000 cedis.
Okay.
And he was asking me, so how did he accumulate? And I said that, you see, around that time, you are not the one determining how much you will pay. They determine how much you pay. He does not know your sales.
Based on the little information.
Yeah, the little information that they have.
They see your revenue, probably may not see your
expenditure. They don't. GRA does not want your expenditure because when they bring that one in, your the chip will go down.
Exactly.
But they always want your revenue
high.
So when they pick that one, then they work with that. They will just calculate something for your expenditure and tell you that, okay, as you are having maybe 100 and something thousand in your account, or maybe in a month you make, let's say, about 50,000 sales, then that means, your expenditure will be around, let's say, 5,000 or 3,000.
Yeah.
But they don't know.
They will estimate
for you.
And everything will be done based on the estimation.
Yes.
So coming back to the co-mingling of funds, right, where they spend anyhow, either from their business account for their personal use or those things. What are the risks? Let us understand the risks involved in that.
The first risk you have is you see that, one, your suppliers will start chasing you. Secondly, statutory authorities, you fall short. And thirdly, you see, most of the times maybe you pay salaries, but you may not be able to for pay all. Sometimes you pay and then you leave some. You get into businesses and workers are being owed for, let's say, 3 months, 4 months.
So boy, hey.
Yes. You can't do chobo. It's a one-man business. If you try making any noise, he will tell you to go home.
Yeah. Okay.
You see, and workers are being owed for that long. So most of the times that is what happens. But I don't blame them. But I blame the fact that sometimes when the advice comes, instead of them picking the advice early, they decide to wait.
So what's the advice? Let's
So the
just
first
make
thing
it
is that
simple for
so the first
entrepreneurs.
thing is that when you are doing co-mingling, you have to know that it is someone's money that you are taking.
Mm-hmm.
So you have to cough out cash from elsewhere to come and fit in. And that is what you don't want to do.
Mm.
So the first thing is that you have to separate your cash.
Okay.
You separate, you know what is for the business and what is yours. That is why my first advice is that every sole proprietorship should, the director himself must be paid.
Okay.
Your first thing is you being paid, so that you know you are on salary. So when you are on salary, you only work with your salary. If whatever you want to do with your salary is your salary, it's like being paid as a normal worker. You work with your salary. Now, the bank account is not yours. So you cannot just enter as and when you want. So the accountant sitting in your office will regulate what you do with that account. That is when you will see that your regulatory authorities, you'll be paying them on time, you'll be paying your workers on time, your suppliers will not come chasing you. All those things will be done on time. So the most basic thing that every sole proprietorship person should do is to put down a salary for himself. No matter the amount that you are looking for, you know your business. You know how much is coming in. You know how much you are spending on expenses. So if you are asking that they should give you 5,000, you know your business can pay 5,000 to you. That is why you are asking for 5,000. If you are asking for 2,000, you know your business can pay you 2,000. That is why you're asking. But as and when you are on a salary, it is at the end of the month that you can draw cash.
So it means that you pay yourself a salary,
Yes.
and you have to live within
That
your
salary,
salary. So
yes.
if we talk of businessman live within your means, it also means that your means is not the business's capacity. It is your personal salary
Salary
that you
that
pay.
you are going to live
And
on.
I think if they are paying their salary, especially if they are paying it through banks, then they can, even based on that salary or the relationship, based on the salary that they get from their businesses, right? They can depend on that to even seek for
Loans.
salary advance and those things with the banks. And
Yes.
then
And the
okay,
banks are always prepared to do that for you if you are drawing down salary.
all right.
Because they will even ask you for if you are ready to take a loan or you want a salary advance or any other thing. So basically that is it. So when you are drawing down salary, it makes working with you very easy. And it makes checking on your business and the growth. You see that within a year or two, the growth that you will see in that business will be different from you co-mingling at every point in time.
That's fine. And I want to add that because you are paying yourself, you have disciplined yourself in with the right strategies, you are going to see your business grow. Growth means that you are going to have higher profits. And I
Yes.
believe that at the end of the year, whilst you have been able to identify your actual profits, you can, based on that, and decide the amount of bonus you can pay to yourself so that bro
Yeah.
okay, now let's go back to one thing about record keeping. So I started this small pure water business, right? I started with cash, bought from suppliers, selling, receive money. Everything is on cash basis. My business is also expanding. If I started with, let's say, about selling like 100 bucks in a month, I am able to now sell 200 bucks. Now I'm growing. So at what growth level should me, the businesswoman, the ice water seller, should think of okay, enough is enough. I cannot keep all the business cash with me. I have to do banking and all those for some that your accountants have been doing.
It's not bothersome. So I will say that from the onset, it's very prudent that you start engaging your bankers or start engaging with an accountant from the onset, because it helps a lot. You see, most businesses, one-man businesses, when you get in and you even want to find records, it becomes difficult because most of the records are in his head. So when he forgets, that is it. Those ones are gone. And those records are the basic things that you will need to fight GRA with. And those
It
ones,
seems like GRA is the enemy.
he's not the enemy.
Okay.
But you see, around a certain point in time, when you start a business, let's take your pure water business like this. Now, in starting, you may not, as at now that we are even speaking, maybe GRA does not even know that you exist. Now, you have started, they don't even know that you exist. And you are still there waiting for them to come. When they come, your cost will go high.
Yeah.
So right now, what you need to do is to go to them.
Okay.
So you going to them to go and introduce yourself. Oh, I'm a business. Okay, I registered around this time. I've not started working yet. I just wanted to start, so I want to register. Around that time, GRA will not come saying that, oh, you registered around this time, so you have already worked for this number of years, so you have to pay this. Because they know that, oh, okay, you can register a business, keep it, and then so when you are able to get money to start the business, that is when you want to start. And that one will make better sense than you waiting for them to come.
Okay. So so that we do not deviate from the question.
Okay.
So you have mentioned that you need to do my so-called abrofosem from the onset.
Yes.
Because it helps you to keep records, and that will be your basis to prove yourself to GRA, right? And hotels.
Yeah. And the next thing is to expand. Now, business, for you to expand, when you start keeping records from the onset, it helps you to expand. Now, when you want to expand, you see that your bankers are even ready to give you any amount that you are looking for to expand your business. So far as they see your cash flow and your accounts that you prepare, which you submit to them, and your auditors have certified them and you have submitted to them, and they see that, okay, whatever you have brought to them is actually what is there, and they see your cash flow, the banks are ready to help you expand. And in no time, you see that the business that you started small with just $100, you may be the number one supplier in the whole community.
Yeah.
You may be the number one supplier, because when it gets to that point and you go and see the main production company, you get credit without you asking, because your bankers are with you. And that one even brings in that trust.
Yeah.
Because when they, even nowadays, there are a lot of businesses who are looking for the big time suppliers. What they do is that most at times they look at the sales volume of most of the suppliers that pick goods from them. Now, let's take it that you started with maybe $100, and then they see that, oh, in 3 months you have gone up to $200. Because when the suppliers come around and then they go back, they ask them questions. They take feedback. Because when you were requesting for $100, they know the number of months you requested for $100, and they know when you started requesting for $200. When they see how your incremental jump is going, they will even come and tell you that, okay, you come, let's sit down. Maybe bring us maybe 50,000. Let's put it down as deposit. We'll supply you goods worth, let's say, 150,000, and then you take time and then you pay. We have your 50,000 there as deposit, but you will give you 150,000 worth of goods. Have time, sell, and then pay. And with that, you see that you'll be earning more, and it all depends on how well you are able to pay. If you pay well, you see that your credit will also go up, and that money is still yours.
Yeah, and I think it's true because with the example that you made, right? Taking 50,000 deposit from you and then supplying goods 150, the supplying of goods of 150 will not come out of vacuum. It is as a result of the fact that they have really seen your records. They have the data to really know that, oh, okay, on a monthly basis, if we advance him 100,000 of goods, right? On a monthly basis, if we give him a payment schedule, we believe that his sales or his books are showing us that he can pay this amount to us at this
This
period,
period,
and it
yes,
makes decision making
very,
very
very.
so bookkeeping,
It's very, very, very useful.
and it
Sometimes,
must be done on set.
yes, if you don't start your bookkeeping early, that is when you fall short when it comes to these other things. And you see, most of times, let's take it that if you don't start your bookkeeping early, you may be a business, you will grow. Maybe in the middle part of your business, you picked up a bookkeeping person or an accountant to keep your books for you. Now, your business have grown, and right now you are in search of maybe a tax waiver, or maybe you don't want anybody to charge you
Withholding tax.
withholding tax. Around that time, that is when you see that the rot that you did in the past, it will come back to haunt you. And just because of that, you may not even try to apply. But you are fit to apply. But you yourself, because of what you did maybe some years back,
Your
if
records are
your
not good.
records are not good from
Bad
that side,
reputation.
yes. And GRA too, before they give you that waiver, they will make sure that from the start of your business till now, you have been in their good books.
Sure.
If there is even a little part where you have not been, they will take their money before they will give you that waiver. And that is when maybe you are also not prepared to pay that kind of amount. So you leave it and then you still continue with your way of doing business like that. So basically, that is it.
So let's talk about pricing,
Mhm,
right? And I think I've had this conversation with some artisans, friends of mine,
mhm,
being it barbers. I think I did this discussion with a barber friend. He
mhm,
will come on subsequent episode, and the person, my tailor.
mhm,
And I asked them, how are they sure, especially with a barber?
mhm,
Whilst you are there, right, you just get up one day and tell you, okay, we are moving from charging from 30 cities to 50 cities. And then
mhm,
I'll ask, what's your basis?
mhm.
And will say, oh, we've increased the electricity, we've increased that, we've done this and all those things. Therefore, I am also increasing my charges from 30 to 50 or to this amount. And I asked that, okay, how sure are you that the 50 cities that you, let's say the 20 cities extra that you are adding to increase
Yeah.
your charge, right?
Mhm,
How sure are you that that is the right amount to
mhm,
use? Okay, because based on what? Like, how sure are you that the 20 cities is enough?
mhm.
Or you have to go higher? Or you have to even
Go
go a
lower.
little to, let's say, 30 or
Mhm,
40? So now let's look at this point. Because they are unable to calculate their overheads. When we talk of overhead, we mean
I
their
know.
cost.
Yeah.
No, not you, hey, champion accountant,
Okay.
so that my audience will understand.
Okay.
They don't know how to calculate the cost that is involved in producing their goods or service. How does that also affect them? Hi, we hope you are enjoying the conversations. Sorry I cut in this moment, but there is important information that I have to share with you. We need you to subscribe to this channel. We need you to subscribe to this podcast. This will enable us to grow our community and show our guests that when they come onto this platform, we are a large community where his ideas and conversation will actually make a massive impact. Without this, we may not be able to convince very resourceful persons onto this platform. I cannot do this alone unless you hit on the subscribe button. Hit on it and let's dive back into the conversation.
So you see, most of times those are the ones that suffer most when it comes to pricing and then and other things. You see, those people, instead of them engaging the right people for them to help them in their pricing, they do it themselves. And those are the ones that when you talk about a bookkeeper, they don't want to hear about that. Now, when you talk to a barber and you tell him that, oh, okay, you are charging, let's say, 50 cedis per head. Now, 50 cedis per head, what is in it that makes it 50 cedis? Now, that barber will be giving you electricity, all those things that you just mentioned. And you go to another barber, he's giving you the same service in a different environment, and then will charge you maybe 100 cedis. Someone will also be charging maybe 40 cedis. Someone will be charging maybe 30 cedis. Now, all of them are giving you the same service, but in different price range.
Mm-hmm.
And each of them, you see that the one who is charging 100 cedis may have maybe an accountant in the background who is helping him with his books, or an auditor in the background who is directing him as to where to place this, where to price this, and then make this here. But those who are low and below there, all that they do is that they will go to one meeting and then they will tell them that, oh, baba adwuma no sɛsi ɔma to electricity no nti no sɛsi a yɛn nyinaa yɛ atum obiara mfa ebia 10 cedis nka the price ho ɛno ano no, that is all that they have.
So to it, you are saying that within the meeting they would have to just decide an amount, an agreed amount amongst themselves
Among themselves, that
to
is all.
charge.
That is all they mostly do.
Yeah.
But instead of, because they see you coming in, sometimes you sit down. When I go to my barber and we talk, you talk to him and you tell him that, Charlie, if I look at what and what you are using, this your price is low. He tell you that, oh, any HMBB can win.
Yeah, they depend on tips. They want to get
You understand me?
but
Instead of charging the right amount, he will tell you HMBB can win. That means he's not even aware that his price is even low. But when you give him a tip,
he'll
he
be glad.
sees you as, oh, the right guy. Whenever you come in, he's eager to come and work on you. You understand me?
I think he has done a good work with your haircut, champion Baba.
That is true. Now, with the tailor, I have how do you call it? An accountant who is an in-law who is
Brother-in-law.
a brother-in-law who is a
Yep.
tailor. Now, that brother-in-law who is a tailor, the last time I was talking to him, so from the onset when he started his business, he was just working with himself. You understand me? It was just people bringing their cloth for him to work for them. Now it got to a time when he had made some money, he had saved something down, and then he went to bring in materials for people to come. So when you come, he already has materials there, and then you buy. So when you see something that you like, you just select, and then he will tell you that okay, this material maybe is 60 cedis. The last time I was talking to him and I was asking him, it's been a long time I've seen that you have gone to the market to bring down goods. What is the problem? And he says, when he sells, he does not know where the money goes. So I sat down and I was giving him free advice and I was telling him that. So when you sell, how do you sell? So when I come and I say maybe I like this kaftan or like this material, maybe Mahama material, what goes into it for you to say that okay, it will cost me, let's say 350 or 500 to sew that material? No, what he told me was that okay, the cost of the material is part, and I said, so how much is the cost of the material? And he says that okay, so this one is 60 cedis per yard. So 60 cedis per yard. He may for me he will use 4 yards. Now 4 yards for me up and down will be how much? So 4 yards times 60,
240.
that is 240.
Yeah.
Now 240, then he charges let's say 150 as his charge because you have bought material for him. If you bring your own material, he will charge you 200 or 250. And I say, okay, fine. So right now, with what you just told me, the two costs are different.
Yeah. The cost for sewing for somebody who brought in their material, and then the cost for him using their material. So the service charge there is a mismatch. If I bring in my material, you charge me 200 cedis. If you sell your material to me, you charge me 150. Then there should be a place where you are making the 50 cedis to cover. You get me? So
yes, because me, I know that he's making the 50 cedis to cover because the price of the material, there is a profit on it.
okay.
And then the service charge that he is charging to. So for him to sell more of his
the
material,
I've
he
reduced
has
it.
reduced the service charge so that he will sell more of his material.
But based on what?
So
What?
okay,
God
so you let me get to the juicy part.
Yeah.
Now, so when he did that, and I told him that okay, you have done that, fine. So how come you are not able to bring in more goods? Because if 240 is for the material, the 240 must go into its account, and then the 150 will also go into its own account. Now, what he does is that when he gets the money, when you give him the total money, he puts them in all together. He does not separate any of them. So when the wife comes that, oh, I want to cook abenkwine today.
Afa? Alomono wen.
You see that thing?
Okay.
So he goes into the account, he withdraws, okay, I hand about to 200, then he gives her 200. Forgetting that is the price of the material that he has given out. Then the next day, his child will come. Daddy, I want calipo. I want calipo. Then he takes 5 CD. Go and buy. Do this. So he was just taking money out of the business, spending without him noticing that, hey, I'm not spending my service charge or I'm spending my money for the cloth. Now, he needs to go and bring goods. He goes to check his money and he has 3,000 cedis in the account. And then the money he needs to go and bring new goods is almost like 10,000. Everything in the shop is also almost finished. The last time he was telling me he wants to go for a loan, and I told him that going for the loan is not the problem, but you have to understand the business structure that you are running. If you don't know how to separate the two, don't go for the loan, because you go for the loan and you become a cost on you and you struggle to pay. He thought I was playing. He went for the loan and he went about it the same way. Right now, he has that cost to pay. The last time I was talking to him and I told him that, you see, you are not doing normal banking like businesses bank, but you do banking because there is a susu person who comes to you every day for you to pay something to the person. So now, pick two cards, 100 cedis, 200 cedis, so that you know that, okay, the 200 cedis is for my cloth business. The 100 cedis is for my service charge. So whenever you need money and you collect the money, you know that, okay, the 100 cedis money I've collected, that is what is running the home.
Yeah.
My 200 cedis money that I am having, that is what I'm going to use to buy goods. Because when you buy more goods and you bring in new material, that is when a lot of people will come in, see new things, and decide to sow more.
And Ken, do you know where my issue is?
Mm-hmm.
Even with the service charge,
Mm-hmm.
the full amount is not his.
Mm-hmm. Yes.
I don't know whether the shop belongs to him or he is renting.
It belongs to him.
Of course, you will still have to
To
set
money aside for those things.
for maintenance of that shop.
Yes.
You may also have to pay bills, right?
Lights.
The lights that
You buy
have machine,
threads. You buy a lot of things. How do you call it? The zips, the tape measures, your cutting tools, all those things you buy. And you know that all that cost is still there. But you see, the last time I was telling him, he was telling him that it will be difficult for him separating the money. And I told him that, see, you can't keep on running your business the same way. You have done it 2 times. And all of them, what does it ended you? In cost.
Mm-hmm.
Why don't you just change it? You just try what I'm telling you. If you try it and it does not work, you come and tell me that it didn't work. I'm yet to go back there again. When I go, I will check whether he is doing it as I said. Because right now, he does not have goods. So he goes to someone else to pick goods and then he will come and sew. Now, as at that point in time, when you are doing that, you see that at the long run, you will be at the loss because you sell my goods for me, you make a little on it, you come and pay me. The little is what you have.
Mm-hmm.
But when you were having yours, everything comes to you.
Exactly. So it is very important. Now let's look at profit on paper and then cash in bank. Okay, so profits on paper, I really I'm struggling how to understand that, but I believe you would help my listeners on that. So profits on paper and then cash in bank. Okay, how does this you understand? Because you see your cash in bank so high, but then there is another calculation an accountant will bring in to tell you that, look, the cash in the bank is not okay. But then maybe you as the small business owner, you may not understand this thing, you may be taken off guard. How does it affect them? Okay, how does it affect a growing business from growing?
Okay. So most of the times that is.
So let's understand the profit
So
on
the
paper.
profit on paper
Mm-hmm.
is the actual profit that you have.
Mm-hmm.
And then the cash in bank is the money sitting in the bank account, which you have already deposited. So the profit on paper is the accountant working out with your expenses and everything, telling you that, oh, this year, this is how much we have made. It's not about how much you have in the bank, but what you have made is what is on the paper. It's not what you have in the bank account. So you may have maybe 100 million sitting in your bank account, but the 100 million is not yours. Maybe how much you made as profit is just maybe 500,000 out of it. That will be what is your whole profit for the whole year. That is what you have made as your profit out of the total money that you have. So most at times the businessmen see the work that you have done. The businessmen, when they see the work that you have done, and then they look at it, they see you that no, you are blocking some part of their money. But that is when you sit them down and then you explain to them that, okay, so now you owe this, you owe that, you owe this, you owe that. And all these people, they have not been paid yet. So take it right now that today, they all come in to come and collect their money. How much do you think you have in your bank account? That is when he will realize, because those people need talking to. That is why I'm saying that as an accountant, the work is not just on paper. Explaining what you have done on paper to the understanding of your manager or the business owner is also part of your job, because sometimes you get there and then what you are saying, they see it as some cock and bull story, because he is seeing a bank balance of 100 million.
And say, who are you to tell me
Who
it's
are
not
you to tell
the
me that it's not
businessman?
the businessman or it's not my money?
My friend,
My
wake up.
my friend, don't tell me that's my friend. Okay.
Yeah. So then we then understand that, Charlie, the money in your bank may not belong to you alone. You have creditors to pay, you have um maintenance to do, so much to do
Yes.
with that money, and everything in there will not be yours. So now, from the profit on paper and cash in bank issue, now if I am a business and I have seen the need for me to really expand, I know that nowadays, Charlie, the demand that is coming on me is very big for me to handle alone or for my current capacity. Therefore, I have to expand. This expansion would really require some level of external money, capital from banks or maybe from investors. Now, the question is, from what point of view does my business become not attractive for bankers to give me money or for investors to bring money to come and help me expand my business?
Okay. So at the point when I would say at the point when you are not keeping records. So everything boils down to record keeping. Now, when you start a business and you are not keeping records, the banks don't know what it's like you operating in the dark. You are operating in the dark. And when you operate in the dark, what happens is that when it comes to light, that you are operating in the dark, nobody wants to associate himself with darkness. Everybody wants to see whatever you are doing in the light. So the only thing that will help you for investors to come in is to operate in the light. That is you allowing an accountant to make sure your books are in check. And being in check with your books makes it easier for anybody, any investor to invest in you. Even it makes it easier for GRA to even waive certain taxes off you. To say that, okay, you have been paying taxes for this long. Okay, right now we are giving you maybe a tax rebate. So you take this, and maybe this ones that you are importing into the country. Okay, we have slashed this amount of it. Take it, and then so that you can bring in more of the goods. and then sell.
So it's all about record keeping.
Yes.
Yeah, it's all about record keeping. Then my next question. So now we normally see, just as I mentioned, that GRA is the problem. I think we have really discussed GRA. We have really discussed GRA extensively. It is not extensively, but we've made them look like Charlie. There is some beastie bees, some animal. But now my whole question is, there is this need, feeling where you may want to put away your tax obligations, okay? Because you have really enumerated one in one of your submission. You told me that at the start of your business, when you even register your business, you should also go and register to GRA. And as a businessman, I've never started business. I haven't even make money. Then, or you say I should go and see GRA. Those who take money from me. There is that incentive of not making myself accessible, want to hide from GRA. I don't want to I don't want them to know me. Right. I don't, even if they know me, I want to find a way to, is it avoid tax, evade the tax,
Evade
right?
tax.
Now what are the likelihood? So when we talk of evading tax, you don't want to pay, you are finding ways of hiding from them. When we talk of avoiding of tax, that one there, you are champion at that. You look at the law, find loopholes, and then dodge
it.
them from paying the money. Now my problem is that, what is the risk of me doing that? How will that affect my business in the long run?
Okay, so what happens is, if really you know the law and you know how to be in the good books of the law, there are certain things that you can do that will bring it down. You cannot evade it outrightly, but you can bring it down to the barest minimum. So there is something that will say that the government must do. They have always been proposing this kind of things, but they never implement them. So one thing that
They
businesses,
propose which kind of things?
so government always proposes that they will give tax holidays to businesses, starting businesses. So, like if you are a fresh business and you want to start, they will give you, let's say, about 3 years tax holiday, so that in the 3 years you accumulate certain wealth before you start paying tax. And that is one of the best things any government could do for entrepreneurs.
Well, but we have that in the laws.
We
It's
have
just
it.
that it is not for every business.
Yes,
It's for
but
some classes of businesses.
that is why I'm saying that being in the law is not being, I want it to be for
implemented.
everybody.
So you want it to cut across. It shouldn't
Cut
be
across, because
specialized.
I want
know
it to
for-
be like, if let's take it that a Ghanaian, you with the foreigners, because right now those things are being given to the foreigners.
yeah.
Yes, they are being given to the foreign
That
companies.
is so that is where it beats my imagination. And for me, sometimes I don't want to even fault the foreigners, because just as you mentioned, tax holidays, okay, they are there. There are provisions for there. Even how many workers really know about tax reliefs? Okay, knowing that I have children in education, I am married, I have aged parents, and that I can really access this thing to reduce the amount of money I have to pay in tax. How many of us? So we do not know, but the laws are there. And of course, the foreign business, now I'm come to make a case for them. The foreign businesses, based on their understanding of how businesses are run, they don't just come in the country and set up the business. They might have consulted a professional like you and I, and ensure that before they even start, they know that these and these and these are the incentive that are in the laws for me to take benefit of.
Yes.
Right? This and this and these are the incentive in the law for me to take advantage
Advantage
of.
of.
Right? So now that I do that, then it means that I'm going to find my accountant who will lead me to GRA, make a case for me. Then I can take absolute advantage of the incentives that are in the law for me. Okay. By you, the Ghana man business over here, you do not want to pay your accountant and pay your submission. It's understandable that they see the accountant as a cost. You, when I was starting the business, where were you? You are now coming here to direct me as to where to spend my money, how to spend my money. I need 4,000 to go and chill with my girlfriend at Kempis Cuba. I catch him say, no. I should pay myself. You understand? So they are not even engaging the professionals anyway for them to help them out in a way that they can reduce the amount of tax they pay to GRA, right? Yeah, so I think the incentives are there. They are not taking advantage of it.
Yes, like what you said. You see, that is why I'm saying that most people are not aware of these incentives. But mine is that I want the government to put it as a clause that any fresh business that's starting in Ghana must have maybe 3 years tax relief, so that it helps a lot of business sprang up. Because when you start in the beginning, it's very, very tough. And when you don't have anything cushioning you, it makes it difficult paying certain regulatory authorities. Today, right now, let's take it. Let's take just a choba business. A choba business right now. A choba business is paying tourism tax. He's paying FDA. He's paying EPA. He's paying income tax. That same person is also paying corporate tax as well. So that single choba business, somebody who just pounds fufu with soup and sell, is paying all these people at a time. I've even forgotten.
There are
There are other ones, health ones that they need to pay.
See, the local assembly.
Yes, those
local
ones
assembly to
will bring their own. So you see, just this person and that person alone paying all this thing. You just imagine if each of them is taking just 100 cedis, 100 cedis, 100 cedis. How much is it? And some of them.
But do you
you let me finish. Some of them are for the year. Some are for the month.
Exactly.
You understand me?
Yeah.
Some are for the year. Some are for the month.
Yeah.
But you see, the person looking at all this costs coming at once, and you see in Ghana, yes, and in Ghana too, what I've noticed is that the regulatory authorities, they come in all at once. They all start collecting their money from January to March.
Okay.
Everybody wants to collect his money.
Yeah.
But they have to spread it out because let's take it that the business started in January. Tourism authority comes. He's coming to take his. It's for the year. FDA comes. He's coming to take it. It's for the year. EPA is coming to take his. It's also for the year. The assembly people who come and take theirs is for the year. You see, all those people are trying to collect theirs within just those 3 months.
And if you have staff that you are paying them salary, you have
to pay salaries too with the SNIT. All those, let's say that SNIT and the rest are monthly basis. So SNIT and let's say income tax are monthly basis. So those ones, let's say it is spread across the whole year. But and even corporate tax like this, those ones are you can spread it across the whole year and pay it small. But the ones that come once in a year, They all try to collect theirs from January to March. If you forfeit by March, you see that penalties will start coming. That is when they start chasing you. They'll come and close your shop right now. They'll come and do something. They'll come and do things to you that you also feel bad. And people will come to you, customers will come around and they will come and meet a scene in your office, which is not
bad
nice
for your reputation.
Yes.
Okay.
And those things are, but when it gets to the foreign businesses, they don't go there to do those things.
They treat them with respect.
You get me? Why do you treat your own brother differently and then you give all the respect to the foreign person?
Yeah, because we are a hospitable country. So Ken, for us to fight the champion man, that's government. Let's move on to this one. Okay, so now we want you to give the businessman a dashboard. All right. From today going, what are the simplest KPI, some simple numbers that you think that they should put in their mind that they should keep their eyes on, which they are going to check on weekly basis in order to ensure that their business is in good financial health?
Okay. So the first thing is that you need to check from each and every business. The first thing that you need to check is your sales. Now, you need to check your sales and your expenses. Your expenses being your receivables and then your payables. Expenses being your how do you call it? Your suppliers, and your statutory payments, and then your maintenance costs, like your costs of operating. That is your overheads. So those ones are the ones that you need to check, and those are most important in every business life cycle. Because when you make all the money by selling or, let's say, providing a service for someone and making all that money, those are the costs that come. And those costs, sometimes we overrun them. Sometimes we forget about them. And when they sit down for long, the next thing you will have is that the regulatory authorities will come in and take everything that you have made and take it away. That is why I'm saying that first and foremost, when you want to start a business, engage professionals. Seek for the advice of an accountant and ask him what and what do I need to keep. Those are basic things that they are Excel sheets that you can just type in certain things so that you don't even just forget. Sometimes you may go and buy something. You just need to just type it down. Okay, I bought maybe a refrigerator, 2,000 cedis. Just type it there. Just leave it.
You are reminding me of SS1 accounting.
Yes, it's true. You just type it there.
Mr. Kweku bought a brand new
Yes.
refrigerator with cash.
With
of
cash, 500,000.
Then you open your T account.
Yes. You leave it there. Just leave it there like that. Whenever anybody comes in and he sees that you have all those informations there, it makes it easier for the person to work. Sometimes maybe the receipts are even dead, they are even gone. But those ones are the things that will help that person well. Maybe when it comes to you proving, that is when maybe you'll be found wanting or something. But those ones can even be got because maybe the companies that you bought all those things from are still existing. You can go to them for them to produce maybe a duplicate or anything for you to make up for your losses. So those are the basic things. Engage the professionals.
Go through them again. Sales.
Your sales. Expenditure.
Then costs.
And then your cost of business. That is your overheads. Those are the main things that you need to check.
All right. Now, I am a business who have been operating for some time now. And unfortunately for me, I did not pick an accountant. I did not speak to any professional. I just run with the vibe.
Mm,
And I am at a case whereby I find myself in a bad financial situation
mhm.
and I need some advice. So let's end with some advice that you are going to give to small businesses who did not start right and now they find themselves in some a mess.
Okay.
How can they turn things
So,
around?
so to turn things around, the first thing you need to do is to engage a professional. Just get to the professional's desk and then tell him your troubles. Tell him what you are going through, and the professional will take it up from there. He will know what to do. He will get in touch with the regulatory authority, whoever you are in a mess with, and then they will try settling it any way out, because there are so many ways of settling bills without you clearing your whole bank account. Without you clearing your whole bank account, you can talk to them, because when you get to the professional will go and sit with them, and then they will come to a makeable conclusion by you paying, whether paying in installments or maybe paying by default. Maybe later you may be paying little by little. Let's say in some years time you pay. All that the regulatory authority is looking for is that you are paying,
And the assurance that
that
the
you
money is
will
coming.
still come. So first things first, engage a professional, engage an accountant for that person to help you with that kind of work. You cannot solve it. So engage that person. Don't look at the cost of you engaging the person, but look at the benefits that you will derive from that engagement that you have done with that person.
Thank you very much. So we are not looking at the costs, we are looking at the benefits that we will obtain when we engage a professional accountant. And this is where we end today's podcast. Join us once again. We are going to bring Ken back so that we speak on an very important topic about keeping um, organizational data. Don't forget to like, share, and keep your reviews coming in. The exciting news is that we are now live on Apple Podcast and Spotify. So you can find us by just searching Disclosures Podcast GH on YouTube. And I believe same on the streaming platforms. See you in another episode. We are out.